Welcome to A Few Minutes with Peter Grandich. I'm your host, Al O'Grady, and for the next few minutes, we'll be talking to Peter, getting his insights on the markets, commodities, business, politics, sports, and life in general. Now, Peter Grandich is the editor of the Grandich Letter, which was first published back in 1984. He has been a market strategist, portfolio manager of 4 hedge funds, and a mutual fund that bared his name, and is also widely known for his accurate forecasts and no-hedge market perspective. He appears regularly on television and radio and is widely quoted in leading financial publications. He's also the co-founder and managing member of Trinity Financial Sports and Entertainment Management Company, an insurance and estate planning firm specializing in servicing professional athletes and entertainers. Peter, as always, welcome back to the program.
Well, I appreciate being back, but that comment you make about accurate forecasts based on a bunch of emails I got this morning, we may have to change that.
I don't think we have to change anything, and I'll certainly support you when the time comes, and we'll get into that in just a second. Before we get into business, let's talk about politics for a second. Some interesting stuff going on in Europe right now. First of all, the date of today's recording, Tuesday, May the 8th. So how about those elections in France and Greece, and how is that playing out in your worldview?
Well, it's an interesting phenomena, but it's also, I think, again, a preview of what's going to come to America. I've said all along that, particularly in Greece, which has been the most prominent one that we've seen, what's taking place there is going to come to the shores of the United States. Take on too much debt, eventually can't pay it. Governments try to go through austerity and realize that they have to cut services and raise taxes. The public, who is minimally guilty because they allowed the government to get themselves into position because it's their government, get all up in arms, don't like the idea, want to throw the bums out, and voting guys that say, no, we don't want to do that, and bring in anybody that doesn't want to bring in those type of programs. And, of course, this is what we just saw in Greece, and we're seeing it in France as well. And that's exactly what's going to happen here when it eventually hits us. People don't want to go through the pain and suffering that only time and suffering will eventually cleanse their problems and ours. History has always shown, we said this, a million times, more debt doesn't solve debt problems. But to answer your question, obviously the markets don't like it because now the view is whatever was coming together in Europe, if that was the thought, is going to come unglued. The unknown concerns everybody. Markets sell off, gold included. And, that's what we're facing at the moment. But we go back to those of us who in 2007 and 2008, it was a small but fairly large group. There was another guy named Peter who also stressed this on all his media shows, that the best was to allow this debt to unwind, cause a deep depression, deflation, and, wash out the overhang. But instead, what do? We pumped out a few more trillion onto what we owe. So the long and the short of it is it's an unknown. The fear is it becomes widespread. Europe comes unglued, and up until a few days ago, I guess people thought the U.S. would not be succumb to it, but the markets are down because people realize it's got to impact us one way or another. And so it's not a good thing. And I don't know the answer because no one knows the answer because there's so many variables of which way Europe can go. One of the things I think that comes out of this is that Germany is no longer the iron ruler. I think we might start to see actually concessions by Germany, and I think the other countries would like that. But I think the other country that needs to be watched is Ireland, because unlike Greece and others, Ireland's people actually made a true move to austerity, and then suddenly see that why do we need to do all the suffering if all the other people of this union we're part of don't want to do it? So they have a key vote coming up soon, and if they cause an upheaval and say that they want to unwind their austerity programs, then I have no idea at this time what will transpire. It's just so many variables and so many different things. It's really going to be a one day at a time approach.
Do you think that this really could be the beginning of the end of the euro?
My feeling has always been that they're going to create some sort of two-tier, or those who are the survivors will try to weed out what they think are the countries that really, now that they look at it, shouldn't be in it. And I think one of those will be Greece. I hope people of Greece background don't get mad at me, but the Greek people have not demonstrated, in my view, a real willingness to take under what they've allowed their country to be, no matter whose fault it is, and do the harsh things that need to be done. And I would certainly not want to be in a union if I was like people of Ireland or others, where we are taking the medicine while others don't want to take the medicine. And even if the medicine is taking, which we had recently in the haircuts, the people still don't move towards that. And, you can yell at the politicians and all, but there's still a responsibility of the citizens of this country, just like ours, who allow that to continue. We have the opportunity to eliminate that by not voting for those people. And I don't want to make this a political talk and all, but there is responsibility past just the politicians. The people of the nation and of our nation here in the U.S. are just much as responsible as well, because we've lived beyond our means. You've heard my talks, the endless talks about too much stuff and public storage and all that. The politicians didn't put a gun to our head and make us buy all that stuff and borrow all that money to enjoy all these things. So there's a responsibility that has to be shared. It's not just government that got people like Greece and the United States into the problem that they have.
Okay. Normally I save questions from listeners right to the very end, but I think it's rather timely that I insert one right now. This is from AJ in Vancouver, and he asks, Peter, is it a good time to short the euro versus the U.S. dollar, and do you really have any projections?
Well, I'm a believer that inevitably the ultimate currency that gets beaten up and torn apart and basically dies a death is the U.S. dollar. So I would not want to be long it or shorting its main component. And if you look at, even as we speak today, markets are down because of what's happening in Europe. The U.S. dollar index is still not above 80, and I don't know what else you would want to have happen and to not expect and not anticipate a major U.S. dollar rally. And so I certainly don't want to go long it, and I certainly don't want to go short its main competitor. So my opinion would be no, I would not want to short the euro at this point in time.
Okay, Peter, let's talk now about the U.S. stock market. It seems the market is going nowhere fast. Is that really what you expected when you went to yellow alert?
Well, I actually felt that the market, would spin its own wheels, but as we got closer to the election, if the economy didn't fall off the cliff, the don't worry, be happy crowd on Wall Street could, leak out a marginal new high in the Dow. But what I would want to do if I was long equities is to use that period of time from the yellow alert issue through the election to be a seller, not a buyer. And realistically, by spring of next year, if not sooner, depending on who wins, and maybe I should clarify that so people don't send emails about that, is I believe if Romney wins now, there'll be just like when Obama had won 4 years ago, almost 4 years ago, a sense of that there is a possibility things could get better again and change and hope could work. I believe if Obama wins, I think the markets or the wise heads would realize that we're going to see an acceleration of where he's gone, which means more debt, more movements towards socialism and secularism, and I think the markets will actually tail off faster than if Romney wins. But in either case, no matter who wins, I don't think they can overcome the fundamentals that have been put in place that are setting us up for a very bad time economically, socially, politically, and spiritually. So I would just have to say that we are not going to expect a big movement in the general equity market up, but at the same time, I don't think there's a huge sell-off anytime soon, and I just think it's going to have fits and starts and stay within a 10 or 15% trading range through the summer and into the early fall.
Peter, when it comes to the market, do you find that you're just kind of scratching your head, just thinking, the old rules just don't apply anymore? You can have sound fundamentals, yet there's just no response, and everything's just kind of going sideways.
Well, there's no question that markets are dramatically different than 20 or 30 years ago. So I would say that, yeah, some of the fundamentals that we used back then don't apply. Part of that's because, we become a big global society. Part of that is also now we have market participants who have abilities to use processes and trade huge larger volumes that create changes that otherwise wouldn't have happened in the old way that orders used to flow and all. Yeah, there's a lot of that. But at the end of the day, I still think the market over a very long period of time is what it was originally set up for, and that was to be part owners of businesses. And businesses do well as a group when economies do well, and when economies don't do well, they don't. And I don't see how the U.S. economy can do very, very well given the constraints that now overhang it, not only economically but politically as well. So that's why I'm not a big fan of general equities in this area of the world. Yet when I look elsewhere around the world, I'd sooner much be owners there at general equities than here.
Okay. Now, I guess on a similar note regarding bonds, I noticed the 10-year T-bond yield is coming back towards the 1.75% area. That was something you spoke about for months as a gift from God, shorting opportunity. Do you think you will get your chance to open your present?
I would like to. I think it's one of the best positions personally for me, and that's all I can speak of. I can't give other people's advice. I can only share what my thoughts are. But I think, over the next multiple years, and no one seems to invest for years at a time anymore. Everybody seems to be focused on the most immediate future, seeing that now in the gold market as well. But I think, as I've described before, and won't rehash it again other than to say that I don't know how bonds can do anything but lose value over time because rates of interest rates and inflation are going to go higher. So anybody that buys a bond at these levels is going to lose money, in my opinion. So I think, yes, I still have that round number in my head and think we can get there, and that would certainly be a move, and it would make news that the 10-year has reached another new all-time low, and in terms of value, bond prices high, and that would be the likely time. So, yes, I'm back into the position of looking for that opportunity.
Okay, you had mentioned gold. We'll talk about this at a greater length. Another day, another bearish forecast for gold. It certainly feels like you can cut the bearishness and hopelessness with a knife. Could this finally be the time when Peter Grandich has to say that he was finally wrong on gold?
Wrong, you said? Well, according to about 4 or 5 emails that came in while we started recording this, they all seem to say, yes, this is the time. I wish that was just what they were saying. But, I'm a believer. Nothing's changed in my book. And sometime maybe I'll have to admit the wrongness of it. I've gone through this, since getting in just above $300. We've had some very sharp and real painful corrections. And obviously that's the absolute minimum we're going through now. But the long-term reasons to own it haven't changed an ounce. In fact, from a contrarian standpoint, I would think I'd be more even enthusiastic now because so many people are throwing in the towel. Yet, here, despite a very sharp down day, 30-day trading range is, one good days of trading. That's the difference from where we've been over the last 30 days. But how many more bears or how many people have thrown in the towel during that time? So, I don't see anything that's changed. I know things are going to get real bad. I know people who have real money are going to be concerned about paper assets. They're going to seek an alternative. What used to be a good alternative in real estate doesn't work because of what happened, and they really are left with one, and that's gold. We don't see people hedging it, the producers. We see central banks buying it. I fully suspect that a couple months from now we'll learn that central banks were big buyers of this metal that's currently coming into the market. So I don't see anything reason to change. I know why people are upset. I know I've lost more on paper than I ever imagined I would even have as a worth 15 years ago by owning juniors, and that contributes to the pain and anguish because the gold going down only expedites, makes that situation even worse. But nothing's changed fundamentally. And yet, there's broken clock forecasters out there. And, a broken clock twice a day is right. So this is their, 1 minute in the sun. but the other 23 hours and 59 minutes, they'll be wrong again. So, I'm committed to that. If we go down and break to low numbers and stay there and never rally again, then you'll have to hear Peter Grandich say that. But I don't see any reason to, and as hard as it's to take, and, it is kind of silly to some extreme what people are writing and saying and how they're resorting to do it. I mean, to send my wife a personal message on Facebook calling her husband all sorts of names, by the way, while she's over in Ireland standing at the side of a deathbed of her mother, isn't one of the great days for me here. But with all of that, Alan, I only tell you that story to understand, how insane some people have gotten about this decline. Those are the things that happen towards the end of declines, not at beginning. So to answer your question, I'll say it when I think it's time, but we're not even remotely close to that.
Could this be an example where sometimes everyone is right? And what I mean by that is, and we talked about this briefly before we started our interview today, you have a much longer term time horizon as far as gold goes. With the bears coming out, maybe they have a shorter term time perspective. If someone bought gold, 2-3 months ago, and they've lost, well, okay, then they might be saying, well, Peter Grandich is wrong. Well, maybe just in the short term, and the bears, if they have a short term perspective, they're right. But if you have a long term outlook, remain the course. What do you think of my assessment on that?
Well, I understand what you're going at, and I think it makes a pretty good amount of sense. The problem is, first you have to look at so-called the bears. These are people that have missed it all the way up, and they're the same. I don't give them any credence. The same as guys that I know who have been bullish on gold for 30 years. They've never once even suggested the thought of not being on it. I don't plug them or talk about them and go, wow, look, such and such is bullish, because they're broken clock forecasters too. They just happen to be on the side I'm on at the moment, but I don't give them credence either. Where I would get very big concerns is people who not only demonstrated they've been right all along, but make a dramatic change. That would make me wake up and say, okay, what possibly is such and such seeing that I'm not seeing, because they have been really right, and they've shown that they demonstrated their objectiveness because they've been on both sides. But again, I'm going to go back to another point, and it's just the general public just doesn't get this, and I guess maybe you have to work in the business and been around it to get it, and that is the world, and the financial world in particular, and most of the media that follow it, hates gold. You can't root for it. It goes in opposition of what you make your livelihood on a day-to-day basis, and that's financial assets. So we're never going to see, even in the best of times, even when gold is roaring up, and the times it will, and it will again, we're not going to see widespread support and enthusiasm for it. It's just not going to happen. So when things go bad for it, the people that make their living going opposite have gone and take that moment in the sun and go, I told you so, look at you idiots, look at, and Warren Buffett the other day and all this type of stuff, and all that stuff is going to be floated around and so forth and so on. We've been hearing that for over 10 years, and during that time, gold was the best performing asset. And you know what? It's allowing it to build and allow those who hadn't been in or been in a big way to get some. And you know who those people are going to be? Because mark my word, and let's mark 90 or 120 days from now, and you make sure you ask me the question, because I think we'll come out and see in the third quarter that in the second quarter, central banks were again aggressive net buyers of gold. So to answer your question, yeah, I think it is correct. I think you can have both groups right for a short period of time, and they'll gloat now. But like I said earlier, I have a longer-term perspective, and the only thing that's really kicking people up is the junior market has been horrible. And I think I made it clear that I have not been on the right side of that. I've 50% higher, I thought these things had bottomed. And I did that by betting my own house and ranch, so to speak. But at the end of the day, I think I'll be justified because the underlying metals will eventually be substantially higher. And I believe for the most part, the biggest positions I took it in, those companies are going to have worthy assets. Now, the downside to that, the risk is that we may get a lot less for them because A, gold doesn't rebound as fast or as high as I currently think now, and they may have to sell those assets or develop them and not bring to a level of price that I thought. But I do believe in my heart of hearts it will be at least higher than what I paid for it, because if I didn't think that, then there'd be no sense to hold them, right, wrong, or indifferent. But because I think eventually they'll be higher than I paid for them, I'll continue to hold them.
Okay, let's move on. It looked like last week that the U.S. dollar was breaking key support you spoke of, yet it managed to bounce back a little, but still can't get and stay over 80 on the U.S. dollar index. So what gives on that?
Again, like I said earlier, despite all this, crap and all the things that are going in favor of the dollar, if one wanted to put it that way, and against its major competitor, the euro, we can't get the U.S. dollar index above 80. And it did touch a low point, and then some economic news came in the U.S. that slightly manufacturing looked better, and the dollar shorts covered. But having said all that, and with this news, if and when we test that low again and go below it, I think we're going to see a big break. So I just, there's no reason, as I said earlier in this interview, to be long the U.S. dollar. I remain and staunchly remain in Canadian dollars. And if I had to take another currency separate from that, it would be the Australian dollar. But I believe the only currency I feel safe about and sleep at night well with is the Canadian dollar.
What about the Chinese yuan? Or is that, are we still
years away?
Can't own
enough of it yet.
Yeah.
Can't own it yet enough. And I think it's a few more years before they actually let it really free trade.
Uh-huh.
But I would own it if I could before I'd own the U.S. dollar.
Right. Okay. Oil over $100. Your thoughts? Any concerns there?
You mean under 100?
Oh, I'm sorry. Pardon me.
Yeah. I think some of that is, the slowdown thinking is taking hold. But I also know that the premium out there for the fears in the Middle East are real, and we seem to even move closer to military conflict there. So I think any weakness, particularly below 95, would be a buying opportunity in oil.
Do you find that if oil, happens to go down, that can actually spur on the economy in some way?
It would have to go down a tremendous amount from here and stay down, for many months to boost things. And the problem there is, and I think most drivers know this, it seems forever for them to bring back the price of gas down when oil prices drop, but they go up so much faster when oil prices go up. So we would need a sustained price probably at $75 or below to really benefit and bring some consumer spending that otherwise would have went to energy back into consumer spending and lift the economy. So I think it would take more prices before we get there.
Okay, on the flip side, what point do you think oil has to reach before people really start doing some major lifestyle changes, really start using alternative fuels, the hybrids, electric cars, things like that? Is there some sort of threshold that you see?
I think the number in the U.S., because I know it's already there for you, is $5. I think the moment we have to pay $5 or more for a gallon of gas and it stays there, the upheaval and all will be large, but then people, out of necessity, will just have to make changes. The problem is, and who it always hits more, are the people who are least likely in a position to make a reasonable change. The person that's struggling, the difference of $4.20 a gallon and $5.20, is someone that has very few marginal discretionary dollars. They're just getting by. They're not in a position to run out and go buy an electrical car, or a hybrid at new cars. They can't afford it. That's why they're still driving older cars, and those are the people who would most likely make that change and alleviate some of the pressures on fossil fuel, but aren't. And that's where government needed to step in and truly, if they wanted to change things, truly subsidize people, the average folks, from doing it. Look, in the transportation industry, there's a major makeover already going. You will find, certainly here in the U.S., I don't know in Canada, but if you look at the local utility companies, buses, et cetera, trucking companies, many of them have switched to gas and electric already because they had to. It was the only way they could survive. We need to give the incentives to people to do so, and then punish people like me who have been blessed and can buy a so-called luxury car to really pay through the nose if you're going to go drive a car that only gets 16 miles to the gallon. You know, I mean, I guess I'm calling out like Buffett saying raise my taxes, but I am part of the guilty people who aren't moving towards conservationists and so forth, still driving so-called gas guzzlers because it's fancy and nice and comfortable, whatever the millions of reasons we choose for. But realistically could get by on a car that gets 35 or 40 miles to the gallon and switches to electrical or natural gas or so forth. But, there's nobody's making me do that, and it's going to take people to make me do that before I do it.
Right. Okay. You were talking about junior resource, the junior resource sector. Is it a case where last one out, turn out the lights on the junior resource stocks, or is this an incredible buying opportunity?
Well, I think people are tired of hearing about buying opportunity because you say it for weeks, and now weeks seems like years. Like you said earlier, people's time frame become really shrunk. You know, when I entered the brokerage business in 1984, all research reports, and I mean all of them, had a 3 to 5 year outlook. No one does 3 to 5 years anymore. That's hypocrisy to talk to somebody about that length of time. But the comparison that I can see this to was the comparison in the late 1990s. I saw articles in a couple of days, just as we spoke again, another person sent me an email about somebody that said now 75% of all juniors are going to disappear because they're not going to be able to raise funds, and, it's going to take that and their ability not to find gold, so gold supplies decline, and eventually it turns, and blah, 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 blah. The bottom line is, it is true, we are going to see a consolidation and all because many of these companies have too many shares outstanding at too few cents a share and just aren't going to make financing sense to finance them. But juniors never really die. They get recapitalized. They do rollbacks and, they start over, et cetera, et cetera, et cetera. But the market has gotten to the point where people's assumption is that there's no need for them. I've called it in recent weeks the buggy whips of the 21st century. There's a sense that there's not going to be a need for a junior resource company because no one's going to want gold or copper or something to find it and develop it and sell it to a major or so forth. And that's just idiotic thinking, in my opinion. And I've made my bet, and if I'm wrong, believe me, Peter Grandich is going to suffer financially from it. But no, I think this is very much like the 1990s. I think there's a sense of loss and, just really no one. I mean, I'm watching guys who haven't been exactly right, and I don't want to drop names, but haven't been right in our business, might have said a few months ago, even though if you really read what they said, they were really hedging themselves, but it sounded like they said get out of the juniors. And now they're writing not only how they gloated, but how all the idiots who said buy were really idiots. And these are all the things, I've been almost 30 years out around this, and I've seen probably 8 to 10 bull to bear markets in the junior market, and all the stuff that happens over and over again is happening again. We like it to turn real fast. We don't like the pain. I'm getting the onslaught. For the first time today, I'm actually upset, not because I'm down 7 figures, but, somebody had to resort to such a horrible tactic and involve my family in their anger. And no one, I don't remember putting a gun to that person's head to do what they did. But again, that type of stuff and that type of mentality and thinking happens at ends. And if you can let me just take an extra minute. Let's turn that. Let's talk about when things were really roaring and everything. Think how everybody was thinking. It just didn't seem it could ever end. It just looked like it could run forever. And if anybody came out then and said you should sell everything, you're nuts. Look, this is happening. The world needs this, blah, 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 blah. Now we're on the other side of the coin. Now, the only question is, did we make a 180-degree turn? Or was it only 170 right now? We got to go another 10 degrees where we're completely opposite from there. And that's where it is. So if you and I have said this for weeks now, if you're really conservative, don't buy gold until it gets over 1,700. Don't buy another junior till that happens. And if not, and you're a speculator gambler like me, then, yeah, they're cheap. They were cheap 2 months ago in my book. So obviously they're much cheaper now.
Do you think that investors, and this is from retail investors all the way to institutional investors, that if they have unrealistic timeline expectations, that this is part of the problem?
Well, it is, because everybody's become short-term oriented. You remember we had a talk, I know we did. You give me the opportunity to share more of my thoughts than just about anybody. So I know I spoke about a writing where I talked about how things changed in the junior market, and it's much tougher now, and I went through all the things. Part of it is people's horizons have shrunk dramatically. Like I just said earlier, long-term investing used to be considered 3 to 5 years. Truly now it's 3 to 5 months.
Yeah.
That's really what it shrunk down to and all. And then when we do have pain and suffering, we want instantaneous relief from it. And eventually, most people only get relief by disparaging and getting away from what it was. And they have to actually sell it and move away. I put up this morning on my blog, not because to gloat or make fun of my friend. He knows who he is, and I wasn't about to name him to everybody else. But I put up the actual email he sent me. And basically what he said in the email, that's it. I want no more part of this. I'm done. It can never work. He named one of the companies that we both own a lot. I can't believe that this price is ridiculous. I'm done. And I reminded him when I forwarded my private response to him, not what I put up on the blog, that you remember you did this about 10 years ago. In the late 1990s, you got like this, Pete, I want no more part of this. I'm never buying a junior again, blah, blah, blah. And then I reminded him in the last 10 years, up until recently, how much beneficial we've done by being in this industry. So, it's hard. It's not easy. Do I sleep comfortably? No. I've lost more on paper than I ever imagined, even at age 40, that I would have as a worth. But I'm personally convinced that there isn't a dramatic change. There isn't suddenly not going to be reasons for companies to need gold and silver and copper and uranium and those things. And basically where the shares have gone down to now, and maybe I'll just skip forward and just talk about a couple of companies. And just as an example of this, not for people to run out and buy them, okay? Let's just take a company like Sunridge Gold, which I've talked probably to ad nauseum to people. And it may or may not be in terms of dollars my largest holding now. It's near that. They just announced that their projects, their net asset values of their projects, their total market cap doesn't even add up to that. So let's just forget what price you paid for a stock and all, and let's just look at it as if we were looking at it for the first time today at 35 cents a share. Once trading a couple dollars as high, and maybe it's low over the last 15 years, was 8 or 10 cents during the dot-com time or when we had the crash in 2008. I don't exactly remember. So what value do they have here? What should I sell because I'm at a higher price here and just get rid of it because it's down? Or if I was first in it today, would I buy it today? Well, I think anything that I could buy, that its total value, if I could buy every share, if I could afford to buy every share, is worth less than the net asset value of all their assets, it's a good time to act. But yet there are people, I'm certain, that are selling it today for no other reason of I just can't stand the losses, I'm in, I can't afford to take any, whatever the million reasons, and they're out. And, of course, that causes selling to beget selling. But fundamentals from a business standpoint, is anything different today than a month ago? Well, I'll tell you what's different. They're a lot better off than they were a month ago. We know they're worth a lot more, and their projects are worth a lot more. So, I could probably go through and many more companies that either I don't work for or I don't own. They fit that criteria right now. So I'm not about to just wholesale sell those things simply because the pain and the aggravation that it's causing me at the moment, when fundamentally they're better now than they were in any time in recent history.
Okay, why don't we just do natural follow-up? What are some of the companies that you do like?
Well, again, people are going to be tired of hearing it, but, you can go across the spectrum. Looking at my holdings, Geologic, companies half of what it was a month or two ago, and within a month or so, they're likely going to report a resource that's increased a very nice way with all sorts of new exploration targets, and projects. Alderon Iron Ore is just a classic example of why I know, and this is just my opinion, it's not godly or a guarantee, but in my heart of hearts, why I know the the market is closer to its bottom than the high. And give me a couple of minutes on this out, because this,
Sure.
now that I think about it, would be a great way. We'll just use this one, so we won't go into any others.
Okay.
There's been a great movement in Canada for iron ore. We all know it. You've heard before Consolidated Thompson. We know in northern East Quebec and into Labrador, there are several companies that have found or are developing very large scale iron ore deposits that have warranted people to be the path to them, mainly the Chinese, and they're developing them. Alderon, we talked, it was the same people that ran Consolidated Thompson. Many of them developed Alderon. I called it, the son of Consolidated Thompson. We speculated that the deposit would be worthy. It was. We speculated eventually a major partner would come in and do an off-take agreement and invest, and they did. It just happened to be China's largest steel company and the world's second largest steel company. Now, just understand, the world's second largest steel company went in, bought 19.9% of the stock at $3.42. Announced it maybe 2-3 weeks ago at the farthest back. Certainly spent many months through due diligence, going through all sorts of stuff, and did an off-take agreement with them, because obviously they would only do that if they expected they're actually going to produce something. So who will end up more likely wrong? The Chinese, because now the stock is $275, and if it's $275, obviously people don't think it's worth $342, or that's where it would be today, and then some. Or will they have been shrewd, got 19.9% of a company that eventually either they or somebody else takes over or produces, and they make a profit on their investment, and also, are assured of a, good flow of off-take to them? I'm going to bet on the Chinese. Just going to go with it. Going to take a shot that they got to be the second largest steel company in the world, because they're not jerks, versus the people that have sold the stock down. We'll see who's right.
And I think on that note, we'll wrap it up. We went kind of long, and I think you just wanted to give a certain perspective on a certain company, and I think you've done that, Peter. And I wouldn't beat yourself up. I think in the long term, you've certainly been bang on with a number of your forecasts. So
I appreciate that, but I've always said to people, this is speculating and gambling. And one last thing I want to add, because as we spoke, another email popped that I'm looking at here.
How is it that you're reading email at the same time we're doing our interview?
Well, it comes across in a scroll. First, the girl reads it, and if she doesn't block it, I read it. So I see what's being said. I've said all along, and you've heard me say this, you have to be not only financially prepared, but mentally prepared. And when I see what these people are saying and all, they never were. And they were really fooling themselves to be in, and this is the proof of it, because if you were mentally and financially prepared, you wouldn't have to resort or have such stress causing it in. And this is what gets washed out, the people that never should have been in the first place. Not that I root for that, or not that I hope for it, but that's the inevitable thing that takes place. So we're really getting close now to it, because now it's coming in bulk. It's no longer dripping in. It's flowing in like a river. So I feel pretty good. We are as close as we can be to a bottom. Doesn't mean it's going to be a V bottom that we go straight back up. But again, I think I'll feel pretty good once we get to late summer and fall that all this will be past us. And
on that note, Peter, I always thank you for your time, and I look forward to talking with you again next week.
Thank you, Al.
Okay. And this interview appears on my website, corporateinterviews.com. It can also be accessed on YouTube and iTunes. Just type in Grandich in those respective search engines to not only access this show, but to other shows that we've done in the past. Now, if you have any questions for Peter, by all means, send me an email, just as AJ in Vancouver had done. My email address, very simply, al@corporateinterviews.com. We'll certainly do our best to mention it on our next program. Now, if you have been a faithful listener all this time and you actually hang in there right to the end, you will know that we've always said to keep your questions generic in nature. Well, Peter is going to open up the floodgates, if you will. If you have any company-specific questions, Peter will certainly entertain them and give you his thoughts on those. And we'll see how that works out. So, for Peter Grandich, I'm Al O'Grady. Thanks very much for joining us.